Hey everyone, I'm Justin Spicer with the Ohio State Legal Services Association, and I'm here with Michael Edwards, staff attorney with the Low Income Taxpayer Clinic at the Legal Aid Society of Columbus, and Luke Menek, staff attorney with the Low Income Taxpayer Clinic of Southeastern Ohio Legal Services. Today we're discussing tracking mileage for rideshare and delivery services like Uber, Lyft, and DoorDash. Feel free to leave a comment or question below, and we'll answer whatever questions we can. Luke, before we dive into today's topic, can you give us a little background about where we are in our self-employment series?
Yes, so today we're talking about tax deductions for people who are self-employed, specifically the deduction for mileage. So a tax deduction is an item that you can subtract from your taxable income to lower the amount of taxes that you would owe. We've already talked about what it means to be self-employed, deciding the best structure for your business, and expenses and record keeping. And today we're talking about the mileage deduction that is recorded under Schedule C. The Schedule C is the tax form people who are self-employed file with the IRS. We'll talk more about the Schedule C in a future video.
Okay, in today's topic, we're going to be talking about the difference between personal mileage and business mileage. Michael, can you explain the difference for us?
Sure. So personal mileage is any mileage that is unrelated to the business. For example, if you're driving around town and then decide to drive for Uber when you get downtown, the miles you drive to get downtown will not count. That would count as personal mileage. A handy tip to help remember is if the Uber, Lyft, or DoorDash app is off, then it's personal mileage. Business mileage, on the other hand, is any mileage you drive from one place of work to another. Using the situation above, if you pick up a passenger downtown and drive the person to the airport, the mileage between the pickup location and drop-off location would be your business mileage. But once you log off the app and become unavailable, your mileage reverts to personal mileage. So your drive home would not count as business mileage.
Why does it matter if my mileage is personal or business?
So only business miles can be used for tax deduction. So you need to have a system to track which miles are personal and which miles are business.
Does the IRS require you to track your mileage in a certain way?
No, there is no requirement on how you track your mileage, so long as you show how you arrived at your calculation. The IRS prefers that you track every mile you drive every day, 52 weeks a year, using a mileage logbook or business diary. You would then figure out which miles were business or personal. This is probably the hardest system to track your mileage because it requires a lot of detailed record keeping. But you can also use what's called the sampling method. This is when you keep track of your business mileage for a sample portion of the year, and then use that sample period to estimate your mileage for the whole year. As an example, if you drove 1,000 business miles in the first 3 months of the year, and you expect to drive about the same amount throughout the rest of the year, you can multiply that number by 4 and then determine your mileage for the year. In this situation, it would be 4,000. Some people prefer to use the mileage tracking software or phone apps to record their mileage. Again, you can use whichever system you want as long as you show how you calculated the number.
Okay, so let's say I've figured out which of my miles are business. What do I do next?
So once you've figured out how many business miles you're driving, the IRS gives you two ways to deduct the business use of your vehicle. You can deduct either the standard mileage or write off your actual expenses.
So Luke mentioned standard mileage rate. Can you explain how that works, Michael?
So for each year, the IRS lets you write off a standard amount for each business mile you drive. For January 2022 to June 2022, the allowance is 58.5 cents per mile. And for July 2022 to December 2022, it was 62.5 cents per mile. The reason for the allowance increase is that gas prices went up. For Uber, Lyft, and DoorDashers who rack up a lot of business miles in a tax year, this may be your better option. To show everyone how this works, let's say you had 4,000 business miles in 2022. You drove 1,500 miles between January and June, and 2,500 miles between July and the end of the year. Your standard mileage rate will be $2,440. This amount will be deducted from your gross income on your Schedule C, meaning if you earn $5,000 for your business, you can subtract $2,440 from the $5,000 you earned. Again, we'll talk more about the Schedule C in a future video.
Luke, you also mentioned that you can write off your actual expenses. Can you explain how that works?
So under the actual expense method, you can claim any car expenses that you have. So this includes your gas, oil, insurance, repairs, and if you lease your car, you can also deduct your lease payment. This method normally works better for freelancers who do a light or moderate amount of driving for work. You still also need to keep track of your personal and business mileage if you use the actual expense method. That way you can figure out what percentage of driving you did for work. As an example, if you use the car 40% of the time for business and 60% of the time for personal, you'd only be able to deduct 40% of your actual expenses.
So let's say I drove a lot of miles in 2022, but I also had a ton of expenses. Can I use both deductions?
No, you can only use one of the two methods to calculate your deduction.
And once I've made my calculations and figured out which deduction method I'm going to use, what do I do next?
So like Michael mentioned earlier, you will record your deduction on the Schedule C with your other expenses. You will need this information to calculate your net profit for your business. And again, we'll talk more about the Schedule C in a later video.
If I have more questions, where can I find additional information?
So the IRS has two publications that can be useful. To find those, go to irs.gov and search for Publication 463, Travel, Entertainment, Gift, and Car Expenses. You can also try Publication 535, Business Expenses.
Great, thanks, Michael, and thanks, Luke, and thanks to everyone for listening. As a reminder, this is the fourth in a series of Tax Chat segments on self-employment. Join us on December 2nd when we'll talk about estimated tax payments for people who are self-employed. And remember, this segment and all the others in our tax series are available on our Facebook page. Thanks, everyone. We'll see you next time.